Welcome back, and it's time for another Macro Monday where I get you ready for the week ahead in 5 minutes or less. Just a reminder, as always, this is just a small snippet of our full Macro Monday newsletter. I will include a link to that in the description of this video. So if you're looking for more in-depth coverage of the week ahead, highly encourage you to check that out if you have not already. It's really a great weekly piece. Even though I spend the time to put it together, I'm constantly referring back to it throughout the week. So again, encourage you to check it out. So as always, we will start with our chart of the week. So as you'll see on the next slide, when we talk about the data, the most consequential data out this week will be July's CPI and PPI reports. Recent PMIs show price pressures building further up the supply chain. And as this week's chart illustrates, it typically takes about 9 months for rising prices paid to show up in broader inflation measures. That relationship has been telling us that inflation surprises are more likely to be to the upside than to the downside moving forward. And this is particularly important because markets right now are betting big on a Fed pivot. Last week's light macro calendar, if you remember from last week, kept traders fixated on the July payroll shocker. As a reminder, just 73,000 jobs were added versus the 100K that were expected. Normally, just 1 week print doesn't shake policy, but this one might have been the catalyst hawks needed to finally turn dovish. And so while labor data is flashing softness, that means inflation is now the biggest threat to those with rate cut hopes. Headline CPI is expected at 2.8% in July, which is up from 2.7% in June, and core is expected at 3%, which is up 10 basis points from last month. So in summary, to sum up the chart, tariffs are indeed feeding through the supply chain. It's showing up in prices paid, as you can see from the jump in the blue series here on that chart, as well as if you're looking at recent PCE reports. And currently, the Fed sees this as a one-off shock, but if it seeps into wage growth, and we've talked about wage growth a lot here and in our research, then all bets are off. So this is a chart we'll be watching closely to see if CPI follows the path laid for it by prices paid. And that brings us to our calendar. Another mixed week here. We have 2 days completely off, Monday and Wednesday. It's oddly lopsided, as I said. Nothing arrives on Monday or Wednesday, but Friday is jam-packed with releases. Surely this is just a coincidence, but anytime we see, Friday afternoon in the summer data dumps, it makes me think a little bit. We'll be watching throughout this week leading indicators such as the NFIB Small Business Survey and the preliminary August reading from the Michigan Consumer Confidence Survey. Both of these potentially could shed light on the inflation outlook and how small businesses and consumers are currently viewing inflation. On top of CPI on Tuesday, as we've talked about at length with our chart, Thursday's PPI will give us another inflation check, while Friday's Empire Manufacturing will test tariff effects on orders, inventories, and hiring. So not a big data week, huge on inflation. For those of us, the main macro story right now is which way is the Fed heading. We got 2 dissents in the last FOMC meeting. Follow that up with President Trump filling in one of the governor's seats. So probably safe to say that it would have been 3 dissents. And now we're going to get inflation data following a weak jobs report. So if inflation comes in cooler than we're expecting, then you will see a lot more dovishness. However, as of now, we are expecting more surprises to the upside. Thanks for watching. I hope everyone has a great week. Don't forget to subscribe to this YouTube channel if you enjoyed this content, and I will see you right back here next week for another Macro Monday.